Hi, it's Paul from CCA, and today we're going to talk about one of our loan agreements, in particular our Div 7A loan agreement. Now, a Div 7A loan agreement is called a Div 7A loan agreement because it relates to the Corporations Act, in particular Division 7A of the Corporations Act, which allows for a business to loan the directors money. Now, it can be done for a number of reasons. There are a number of reasons why businesses want to do this. And it's really something that needs to be done with the accountant of the business. And it's not something that we would really do between the director and the business. It really needs the accountant to get involved in it. The reason why we've released these Div 7A loan agreements is basically just to formalise them. The ATO are now looking at these loan agreements, putting them under a microscope, and they're wanting to see a formal agreement in place between the company and its director, so it's not viewed as a way of negating taxes. So the ATO wants to see the term of the loan, the amount of the loan, there are payments, there are payment times, whether there's interest being charged, etc. So really formalising these loan agreements is a high priority for most businesses that that use these particular loan agreements. Now, one of the key reasons you'd use CCA to develop your Div 7A loan agreements is the back office accessibility and reporting that you get. Along with the loan agreements, you also get access to your back office. Now, your back office is very important because it shows when all the payments were made. You can automate the payments from the director back to the company. As I said, you're charging interest, so you can actually even pull down a report detailing what portion of those repayments were interest, which is very handy for your accountant. As I said, it's probably something that your accountant would do for the business rather than the business owner doing it themselves. But that all comes complete with the Div 7A loan agreements. Now, I suppose the only other thing we need to discuss really is the investment required by the business in order to get these Div 7A loan agreements in place. Now, just the fact of having a formalised agreement in place is priceless, especially when it comes to the ATO. Rather than asking questions about how all this was set up, you've got everything for them. Just send them the loan agreements and the back office reporting, and it's done. So your investment for a business is around about $250 a month for 4 months. So it is relatively inexpensive. That's pretty much all there is to it. It's not that complicated. It is just a loan agreement, and most people are pretty familiar with loan agreements. They would have done that a number of times in the past. But I understand you probably do have a couple of questions. So what I'm going to ask you to do is to hit that Contact Us button in the description below. Drop us a line, fill in your details. We'll give you a call. We'll discuss the particular loan and make sure it's suitable for your particular requirements, for your individual needs. Absolutely no obligation. The one thing I am going to ask you to do, and that is to do us a huge favour by sharing this video across your various social media platforms. A lot of businesses aren't aware that these loans are available, let alone the fact that there can be such thing as an automated direct debit system attached to the loans, as well as the security, because that's a really positive thing with these loans. So please do us a favour, share this across your various social media platforms. But that's about all from me. If you've got any questions, as I said earlier, just hit the Contact Us button. But listen, have a great day. Stay safe. Thanks for watching. Ciao.